What is up, everyone? Welcome back to another episode of the Sound Money Podcast. I'm your host, Steve McGarry, and today we're going to be talking about the U.S. economy collapse / economy crisis and the differences and what would happen in the event that actually took place and what would need to happen in order for that to take place. Now, the only reason that I'm bringing this up is because a lot of people in the DMs and comments have mentioned an economic collapse, what would happen, and what an economic crisis is, and some of the scenarios of a total economic collapse. Now, keep in mind that in 2008, that was not a collapse, that was a crisis, and that is something that is very important to preface this with, is a collapse means everything falls down. Now, that is an extreme version of on the spectrum of economic crisis. A collapse is just the ultimate worst thing that could ever happen. And that seems to be thrown around a lot more loosely nowadays, which is a little disturbing that people are talking about a collapse. I don't believe that is something that could happen. I do think that crisis and recessions happen just because that's what capitalism and free markets, a product of that. So the important part is differentiating those two. I want to make that very clear to everyone so you're not freaked out. Economic crisis is not the same as an economic collapse. 2008 was not a collapse. Millions of people lost jobs and homes, but it was basic services were still provided. Now, a collapse is when basic services are out of order. Your currency, your food, your electricity, your water, everything shuts down. Now, it would happen quickly. A collapse, no one would predict what was going on. It would just happen extremely rapidly. And there are a few scenarios here that I want to go through. I'm going to be linking these articles below. I got a lot of pushback from a couple of previous episodes about not linking articles. So I'm going to link these and a couple of others that you guys can check out with their sources below that I'm going through. If you guys are watching on YouTube, don't forget to smack a like on the video. It really helps the channel. And if you guys are listening on Spotify or iTunes or any other podcast platform, thanks so much for tuning in. Don't forget to subscribe. Now, let's dive into it. How close are we to a total economic collapse? Now, I had a discussion with a fellow econ major a couple months ago at a wedding that I was at in Cincinnati, Ohio, at my buddy's wedding, and he was saying that what would trigger a crisis, now not a total collapse, it could cause a collapse, of course, but the U.S. dollar rapidly loses value. Now, all around the world, people have for many years used the U.S. dollar as a kind of a peg, using it as a way of measuring wealth and whatnot with various different currencies. Now, if it created hyperinflation and if it started decreasing value rapidly, like what we saw in Venezuela, this could trigger a massive amount of losses. And not only would that trigger something like a collapse, but it would trigger a bank run. And a bank run is basically when everybody runs all at once to pull their money out of a bank. And this is something that happened in the Great Depression. This is something that happened in 2008. It's very psychological. And, panicked investors in 2008 withdrew $140 billion literally to just fund their day-to-day lives. And they pulled that out of the banks. That was considered somewhat of a bank run. And banks cut off lending. They cut off cash withdrawals to keep themselves alive. And it becomes this kind of chaotic survival of the fittest situation between the bank institution and the people, where people are trying to withdraw and they're saying, no, you can only withdraw like, $1,000 today or per month or whatever they set the limit at. And this has happened in a few countries currently. You can watch it on the news and see that things have happened in Paris, in India, and in all these different places where banks have locked funds. Now, the third example of what could trigger a collapse is something with the internet. So we have seen lots of recent obnoxious hackers going out there, putting out ransomware, getting hospitals shut down, getting states and governments shut down. Just this past week New Orleans declared a state of emergency because of ransomware attacks on their city. Now, this is something that would have to be very orchestrated by a very highly organized organization. And if it was like a super virus that prevented emails, transactions, all financial transactions and things like that taking place on the internet and locked everything based on where your IP was located, that would definitely trigger chaos because we rely heavily on internet now, with all of your funds being on the internet, on banks, and on websites and things like that, and transactions, purchasing things. Amazon would be locked up completely. So it's important to keep that in mind, when you're thinking about where you're storing your wealth, how it's related to the internet. Most people would just say it's all in the cloud, all on the internet. So that's the third way. The fourth way is a little bit bleak, but that's terrorist attacks, a massive oil embargo that could halt interstate trucking. Grocery stores would soon run out of food. Now, trucking, I worked in the logistics industry right out of college. I was doing like little macros on this old IBM interface, sending and managing truckloads that were going across the United States, kind of like programming, but it was much more mundane and kind of crazy. But that was very, very eye-opening to me, realizing how much is involved with trucks and logistics. Like everything that you have, everything. Like my little hustle mug came on a truck. These gaming headset things came on a truck. This microphone, this shirt, these blinds, this wood, everything comes on a truck at some point or another. And it's important to know that that is a massive source of food, if not one of the biggest linchpins to getting food into your supermarket right where you live. Now, the fifth one, widespread violence erupts across the nation. It could range from inner city riots and civil war of foreign military attack. So this one, I don't want to go too deep into, just because I don't see this happening. It's not likely, in my opinion, in this day and age, with our level of technology and law enforcement and military. It's just not something that would happen. Number 6, the Federal Reserve actually warned that climate change was a threat to the financial system. Extreme weather, climate changing, forcing farms, utility companies, and other companies to declare bankruptcy. Those loans would then go under. It would damage banks' balance sheets. And just like the subprime mortgages, it could trigger something like a financial crisis. Actually, Penn State University did a study that predicted extreme weather in North America would increase 50% by 2100. So that is 80 years from now. But it would cost the U.S. government $112 billion per year, according to the U.S. Government Accountability Office. Number 7, natural disasters could cause a localized collapse. If Hurricane Irma had hit Miami, its damage would have been worse than Hurricane Katrina. If in 2019 a polar vortex breakup had it lasted weeks instead of days, cities would have shut down. And they, let's see, Munich Re, the world's largest reinsurance firm, blamed global warming for $24 billion of losses in the California wildfires. It warned that insurance firms will have to raise premiums to cover rising costs for extreme weather. I know people that live in California. We just moved from California in the San Francisco Bay Area, and people's insurance went up. And I know multiple people that called the insurance company and said, hey, why is this increase happening? And they said, you can definitely keep us. We don't want you to. We want you to quit and go to someone else. We don't want to insure you. So they can bump those rates up, and they can push people out basically and say like, all right, instead of $10,000 a year, it's $30 or $40 or $50,000 a year. And the sky's the limit for them if they're insuring your house and you're near wildfires or whatnot. It's a dangerous game because they don't want to insure you. They want you to leave, so they can just keep moving that price up, and you don't have a choice because you need to insure your home, and that makes insurance too expensive for most people. So the last one, some people think that the Federal Reserve or international conspiracy of the United States toward economic ruin. There's a lot of conspiracy theories type things out there. The economy is run on confidence that debts will be repaid, food and gas will be available when you need it, and that you'll get paid for this week's work. If a large enough piece of that stops for even several days, it creates a chain reaction that leads to a rapid collapse. Now that we've gone over those scenarios, what do I think? I think that there is a potential that the US dollar does lose an extreme amount of value. It has lost a substantial amount of value. Even if you're brand new to the United States, if you have a $100 bill, it would have been worth a lot more in spending power 20 years ago, 30 years ago. And now it's worth much less. It buys less. And something that plays out is that it does lose a substantial amount of value. I don't think hyperinflation is something that is a possibility in the next recession. It could, but I just don't see it happening. The dollar could become dirt cheap, and people could rush to other currencies like your yuan, your euro, gold, Bitcoin. They could be rushing to all of these different types of currencies to get out from the US dollar, and that could definitely really, really affect it, because right now the economy is trending upward. It's a beautiful graph. It's a beautiful trend, and I'm very happy that that's happening. But what goes up, can't always stay going up. That's just what we learned in 2008. Many people say we just can't have nice things. It can't always stay up, especially when we're printing money. When the Fed is printing $400 billion in 2020, they've already declared for New Year's they're printing another $400+ billion to inject into the economy. If you just keep printing off cash, that is not good. It doesn't solve the issue. If we're just printing cash to pay debts and we're printing cash to push into the economy, that dilutes the value of that current currency that you're printing. And I've talked about that in the past. And I think that, if demand for the dollar and U.S. Treasuries plummet, interest rates skyrocket, interest rush for other currencies, do I think inflation or hyperinflation, could happen? Sure, it could happen. All of these scenarios could happen. There is a probability of each one happening, but do I think that it's realistic? No. I think that there will be the U.S. dollar will lose a rapid amount of value. I do think that there's going to be something that happens, but I think it's important to keep in mind that we do have a lot of infrastructure set up. We bailed the banks out in 2008. We would do it again. There's enough money out there in the world to help each other out, and I think that these chain reactions and that could lead to a rapid collapse. I think that there's a lot of history. The 1970s stagnation, when the gold standard was pushed out, 1981 recession, 1989 savings and loan crisis, recession after the 9/11 attacks, the 2008 financial crisis. This is not just a new pattern. This has existed for a very long time. Now, some ways to make sure that you're ready is to understand the basic economic concepts so you can see when it's coming. Obviously, it's going to be a lot of noise that happens in the media when a crisis happens. Not a collapse, keep that in mind, a crisis, when that does happen in the future. But it's important to keep liquid assets, so that means that you can actually withdraw when you need them within a week's time frame. Cash. Not many people will sit on cash. Ooh, sorry about that. Not many people will sit on cash. They're going to, try and move things around. Make sure you have skills and various different things like farming, cooking, repair. These are like doomsday prepping type things, but I figured I'd mention them. Make sure your passport is current and keep yourself in physical good shape. Now, these are obviously radicals. These are things that are coming up more and more, and I want to make sure that everybody knows, there are different sectors of the economy. You have primary sector, you have secondary sector, you have service sector. Primary is going to be your raw materials. An example will be like mining, fishing, agriculture. Secondary is like your goods, like your toys, cars, food, clothes. Your services are like your retail, tourism, banking, entertainment, and IT. So just keep in mind that you have your three different sectors of the economy, and just make sure that you understand the basics of how things operate in this economy in this day and age. Now, it is bleak to talk about, but a lot of you guys have asked me. A lot of you guys have wanted this episode, so I figured that I would make it. I don't mean to be fatalistic or anything like that, but there will be a recession in the future. So just keep yourself educated. Don't be afraid to adapt. Keep in mind all of these different sectors, your primary, your secondary, and your service sectors. Just keep those in mind. Understand how things operate, what's going on with the Fed, why are they printing off billions and billions of dollars. And just keep in mind that the US dollar is not always going to be safe. As always, is ironclad. It's created by humans, and that means that there are going to be flaws in it because it's created by humans. That's just basic science. So that is it for this episode. If you guys are interested in learning more, the links will be in the description below. And yeah, thanks so much for watching. Don't forget to subscribe. Link to my course will be in the description, and I will see you guys on the next episode of the Sound Money Podcast.